Okay, so whenever I join one of these type of calls, I always like to know what to expect. It kind of gives me an idea of whether or not I'm going to stick around, if this is even applicable. So I'm going to let you know ahead of time what to expect. I'm going to talk about the rewards of scaling, but then whenever there's a reward, there also has to be a challenge. And so the challenges of scaling are what I call mindset, plan, and money. So it's the roller coaster of the emotional and the mental considerations. Then how to create and sell a scalable offer. And then we talk about my favorite thing, which is the financial considerations of money. Then if you stick around long enough, I'm going to let you know how to get in touch with me and help and give you a guide to get started. So you are investing right now the most important thing that you have in your life, which is your time. And so to get the most value out of this, I ask you to be a beginner. Now, we're all successful business owners and really know our stuff, but this may be a topic that's new to you, or it may be something that you are very familiar with. And so no matter what, I just ask you to be a beginner. I ask you to be present and take notes. I often get the most out of things as to when anything that the presenter is sharing, if it comes to mind and like, oh, kind of gives you an aha moment, jot that down. And then discover and think about how this could be true. So what I'm talking about might not actually apply to your specific circumstance, but think about how it could be true. And then I want you to have fun and engage. I want you to jot things down in the chat. You know, if something really resonates, say so in the chat. And then finally, I want you to take action today, and I will help you with that towards the end there. So next is about me. So this is my family. My family is my heart and the reason why I do what I do. And some of you might have adult children. I have all adult children. And if you thought that getting a family picture when they were kids and getting them to pose for the picture when they're little, that is a completely different ballgame when they're adults. Like they are like not having it right now. And so this first picture on the left, I had realized that we were all sitting down on the couch at the same time. And so I quickly snapped a selfie. I think the one on the top left corner there's unconscious, but we're still going to count it as a family picture. And then the one on the right was taken earlier this year. And it was just, we were hanging out at my mother-in-law's house. I realized that we were all in the same room for the first time in 18 months. And so I just said, someone quick, take a picture of us, because I don't know when we're all going to be in the same room again. So maybe you can relate. And then this is me. So this is it's so fascinating to me because sometimes it's a difficult situation that redirects your life. And this is what happened for me. And this was in November of 2020. I was getting ready to walk into my accountant's office. And as I walked in, I noticed her body language. Now, she had been my accountant for over 10 years, and she looked uncomfortable. And we had a really good relationship. And so I was a little nervous as I walked in. And as I walked in and I sat down, I noticed she took this deep breath. And I'm like, oh, no. And she said to me, well, the good news is you had a great year. And I said, knowing that when you start with the good news is, that it's usually followed up with, well, the bad news is. And so I said, yes, we did have our best year ever. What's the bad news? She then proceeded to give me a tax flow or a tax estimate of what I was going to be owing in a few short months. And to tell you how I felt at that moment is I literally wanted to burst into tears. Yes, we had the best year we'd ever had. And where had all that money gone? She said I had made all of this money. And as I thought back, I thought, well, I did what you're supposed to do when you have extra money. I paid off some bills and I got a little bit into savings, but there's no way that I was going to have that much cash that I was going to need to pay that tax bill. And so it was at that exact moment that I knew I needed to find a cash flow system that would work for me permanently so that I would never have to find or feel that way again. And so it's, as I said, we're compelled to seek solutions during challenging situations. Sometimes we create the best solutions at that time. And so with that being said, as a side note, I did find and create a cash flow system, and it was no longer, I no longer had to rely on bank balance accounting, and I didn't have to, in my finance degree hadn't helped at that point, or 10 years of experience running this multi-million-dollar practice. I found a solution that worked for me. And so let's go ahead and jump right in. So what is scaling? When you're thinking about scaling, what is scaling a business? So scaling a business is about growing and expanding its operations to meet rising demand, make more money, and boost profitability. A lot of times it is to increase the capacity to handle more customers and reach new markets and deliver more products and services. But scaling goes beyond our regular growth and expansion. It often requires implementing new technology, hiring new people, creating new systems, and making changes to roles of your employees. And the process is to support those growing roles. It goes from when you are spending $1 to earn $2 to spending $1 to make $10. And so you want to make sure that the profitability increases as well. I like to say that successful scaling is about creating a pattern of scalable thinking, asking and answering key questions, and getting the right resources in place. And so why do you want to scale? I want you to jot this down. If you feel like sharing it in the chat, please do so. But why do you want to scale? What do you think that scaling is going to do for you? So the rewards of scaling include meet that rising demand, create a bigger impact, freeing up time for founders. As we started this dental practice, yes, my husband was the dentist and I did everything else. And our time reflected that. He was working an average of about 40 hours a week, and I was putting in 60 to 80. And at that time, I knew I needed to do something different. I had to change some roles or do something different, because I did that for about 5 years. And if you've owned and run a business, you understand where I'm coming from. But not only that, we want to increase revenue, but not just increase revenue. We want to be more profitable. We have to take into account the profitability. So while we often do things with the rewards in mind, we also have to look at the challenges of those things. We must be able to keep the reward or the result in mind, but if we know what challenges and obstacles are coming up, a lot of times we can better handle those situations. And so what are some of the challenges of scaling? What would you say are some of the challenges of scaling? Okay, so let's talk about it. Scaling is actually going to be one of the most expensive times in your business, not only in money, but in stress. And I cannot emphasize enough the importance of cash flow and how you are going to have increased expenses. It could be the cost of hiring. It could be the cost of new software or equipment. But you also have to keep in mind how to prepare your clients for the transition, your existing clients, and also any new clients that might come into mind. And so again, we're going to talk about the mindset, the plan, and the money. And sometimes there's hidden money that you have to find. And in my little slide, I hid some money in there, so see if you can find it. So let's talk about the emotional and mental considerations of scaling your business. So first, there's going to be added stress. You have to know there's increased responsibilities, decision-making, your workload is going to increase. You're going to have pressure to meet new targets and your expectations. And a lot of times there's high stakes situations. Then you have fear, the fear of the unknown. And are you going to fail? And if you are scaling, are you going to be able to continue that at a sustainable rate? And uncertainty comes with that fear. You're just not sure. We can plan it all out, but we just don't know if it's going to be successful. And then there's often role transitions and team management. As as you grow your business, you're going to have to look at the different roles of all of your different employees and your contractors and make sure that they're in the best role for them. And your role is probably going to shift. You may be going from a solopreneur into someone who is more the CEO and not delivering all of the services. And then finally, the isolation and emotional strain. You may feel alone and that you are the only one in this situation. And it could be because of a lack of peers or mentors who understand about scaling challenges. And a lot of times during this time, we feel imposter syndrome, like, do I really know what I'm doing and why? Who do I think I am that could be doing this? And so I think it's really important that as you do this, be sure that you're willing to feel all the feelings. Of course, you're going to be feeling these things. Just know that this is a normal process and you're a human being, and it's really important to allow yourself to feel those feelings. But it's also really important to create coping mechanisms to deal with each of these issues. Some of the coping mechanisms that I recommend are to seek support, connect with mentors and peers and entrepreneurial communities, just like this one that we're in right now. And especially in Leadership Global, you can find people who are going through the same thing. And also practice self-care. Some of my favorite self-care activities include biking or hiking. Now that I moved to Saipan in the last couple of weeks. I love going to the beach, walking on the beach. The sunsets are just amazing. And I love getting in the water. And so that is my self-care. And next is to delegate and build a strong team. I cannot emphasize the importance of this. A lot of times as founders, we have a hard time delegating because we're not sure that the people that we delegate to will do it at the same level, but we have to build trust with them and allow our team members to fail, allow them to make mistakes, because that's where growth happens. And that's how you really build a strong and unified team. So knowing that you have these challenges ahead of your scaling and how to put into place coping strategies, it's going to help you deal with the stress. So creating and marketing a scalable offer. There are a lot of things that go into creating and marketing a scalable offer. So I want you to really spend time here. Spend time in the planning phase. Don't just do what your friend is doing, or don't just do what your coach recommends. Now, they are absolutely wonderful resources, but your business is unique to you. And I have worked with clients who've had business coaches that told them to do something that they just internally felt like it was wrong, like it wouldn't work for their business or that wasn't the right thing. I say trust your gut and really think it through and question and really say, what do I need to do for my business? And don't just jump, like plan more. Like my dad always said, he's a contractor for over 40 years. He always says, measure twice and cut once. And that's the same thing with planning. Really think about what you're doing for planning. And so some of the considerations you need to think of as you're creating a scalable offer is your business model. Now, your business model is how you're making money. And how is that going to change? And then you also need to say, well, what stays the same? Ask yourself what's going to stay the same, and then what things need to change as you're getting ready to scale your business. And then I really like to challenge you as you're thinking about your business model. I want you to think about how big you can grow while maintaining your current expenses. Like, it's really good to have an idea and a plan of where you want to grow, but I want you to think about what could you do without incurring any additional expenses. And then you can really maybe do that first before you start really going into the scalable offer. So next year, we're going to talk about a new product offering or expansion. And so there's different ways to scale your business. A lot of times it's either a new product or offering. So maybe you're a coach and you're doing one-on-one and you're going to transition to group. That's one way, but maybe you're just going to expand. Maybe you're going to hire additional one-on-one coaches. There are multiple ways to expand your offering. And so you just really need to think about the different ways that you're going to expand. For us, At the dental office, we hired a new dentist. But not only did we hire the new dentist, we had to hire an additional 2 to 3 people as support staff with him. And so really put your thought process into, if I do this thing, how's it going to change? And finally, as you're doing this, think about the acquisition and retention costs. According to a research done by Bain & Company, increasing customer retention rates by 5% increases your revenue by 25 to 95%, and not just revenue, but profits. And the Harvard Business Review states that acquiring a new customer can be anywhere from 5 to 25 times more expensive than retaining one. I cannot undervalue the value of an existing customer. So as you're getting ready to scale your business, think about retaining those customers that you already have. And then finally, you have to think about the required resources. So it's often new employees or contractors, or maybe it's shifting the roles of those employees. And it could also be technology or software that you have to change. And of course, the financial considerations as you are getting ready to scale your business. So we come to my favorite topic, which is money. And I love talking about money. I want to normalize the conversation of talking about money. So many people don't want to talk about money, or they really kind of just shrink in their chairs as we're talking about money. I'll give my disclaimer that I am not a CPA and I am not a financial advisor. I am a cash flow management advisor, and I have a lot of personal experience. I've scaled a business from 0 to over $2 million, and I have a lot of experience with my clients. So let's talk about my favorite topic, which is money. So some of the biggest financial considerations, and this is something that I want you to write down. You cannot grow out of a profit problem. Let me repeat that. You cannot grow out of a profit problem. You need to have solid systems in place before you decide to grow. And so what is that? What does that look like? You've got to see where you are. You have to understand where you are before you can get to your next level. It's just like a GPS. When you ask what your destination is, it always asks you, well, where are you now? And so it's the same with our money and our financial considerations. And so just understand that what got you here is not going to get you to the next level. What you did to get to the first 100,000 is not going to look the same as what's going to get you to $1 million. And from $1 million to 10 million, that's also going to change. So you always need to stop and evaluate where you are before you move forward. So I'm going to ask you this, and feel free to put it in the chat if you want, but if you don't, it's totally okay. As a business owner, have you ever skipped a paycheck? Have you ever hired an expert to increase revenue, or taken on a problem client for the revenue, or even a problem project? Have you ever created a new product just to create more revenue, or given last minute promotions and discounts, or taken action against your vision? This one's my favorite, saying that you don't take a salary because you're reinvesting money into your business, that you are reinvesting that money. I would rather have you take a salary and reinvest slowly. Again, you cannot grow out of a profit problem. You have to figure out the things that are making a profit and then dump the things that don't. So you need to evaluate your cash management system. And I call it my essential 4. You've got to have, every good cash flow management system has to have allocations, revenue targets, a cash flow manager, and a reporting system. So let's dive deep into those different things. So first is the allocation plan. I like to call this the envelope system. That's what an allocation plan is. It has different categories for different envelopes for different expenses. You're setting aside money for different things. The big 4, and these are based off of the Profit First book by Mike Michalowicz, is you have to have intentional profit. Typically, the formula, I love myself a good formula, but the formula for profit is revenue minus expenses. We're going to flip that formula on its head and pay ourselves first. So it's going to be revenue minus profit equals what's left over for expenses. And as you're getting ready to scale your business, I want you to add a couple of envelopes. First is a scaling expenses envelope. Set aside that money ahead of time. And then, of course, we want reserves. We want to have reserves in our business to help us during the peaks and the valleys of the business. It's really important to put all of these things in place ahead of time so that you don't have to worry about the ups and downs of your business. So this is a tide chart. I don't know if you've seen a tide chart before, but this is actually the tide chart upside down for this week. And that's one of the things that I'm starting to understand the importance of as we're getting ready to go to the beach and as we're doing different things. But the level of the water really does make a difference. Well, this really reminded me of the ebb and flow of your business. My business is the ebb and cash flow. And I love seeing these patterns of money. And so first we look at like the yellow line. This could be like our monthly cash flow, to where maybe at the beginning of the month you have a really good cash flow, and then it dips in the middle of the month, and then it goes back up at the end of the month. And if all of your bills come down here, it's really nice to know how to even that out. It's nice to know the pattern of that cash flow. But that is just the monthly side of it. If you look at the orange line, that could be the yearly cash flow, to where they have peaks and valleys in the yearly cash flow as well. At the dental office, we had September, and it was followed by Rocktober. And it only took me a couple of years to realize that September was historically a very low month, where October totally made up for it. But knowing those ups and downs of the business really made a difference in my planning and understanding where the cash flow was going to be. So this can also apply. So understanding the cash flow patterns are monthly flow, yearly flow, but it can also apply to your product or service. As you are looking at the product, a lot of times they start with a really good launch, and then they dip, the sales decrease. And in fact, often my scaling clients have a really good first launch with their scaling product, but then their second launch, their second sales cycle is significantly lower. And then it's usually about the third sales cycle where they finally get the rhythm of it. So it's just really nice to know that the products can have a cycle too. Okay, a revenue target. What is this? And does anybody have a revenue target? Think about this. Do you have a revenue target? Linda has a revenue target. So I have to ask you, when I ask a lot of my clients this, they say, well, yeah, I want to make as much money as possible. That's not a revenue target. It needs to be an actual number. And there is a formula for that. Of course, I love myself a good formula. So when you're creating a revenue target, there's things that you need to make sure that you're putting in there. So know your categories, which are the envelopes that we talked about. Know where you need money to be going. And then you create the rings of your target. And the rings that I say are the essential items, and then your optional items, and then your long-term or future items. And sometimes you have to start out here and only have just the essential, and then you're going to add in the different targets as you get closer and closer to that bullseye for you. And then, of course, you need to review and adapt. You always need to review and adapt those targets. And run different scenarios, run different numbers. You're going to run them as the essential, the optional, and the long-term. And you're also going to run scaling numbers. So let me show you how this works. So here I have a revenue calculator. Now you can get these revenue calculators online. I Googled them. I Googled profit first revenue calculator. I found multiple examples. But what it is it has my 4 major categories. So like for this example, I'm actually going to put in 5% here and taxes. So intentional profit. A lot of business owners are not taking an intentional profit, or they do not have a money set aside for profit. If you haven't, that's okay. You put 0 there, but I would recommend that you would put at least 1. As a new business owner, you want to put at least 1, maybe 5%, just to get started. Now, taxes, this is the number that you get from your CPA. This is a percentage of your top line revenue. It is not your effective tax rate. Let me repeat, it's not your effective tax rate. This is a percent of your top line revenue. And then you need to enter your owner's pay. So for this example, I have $3,000 in here. This is the amount of money that you're taking out of your business to pay yourself for the work that you're doing in the business. And then finally, you're going to put operating expenses. So I'm going to change this number back to 5,000 just for this example. So you can see that if we have an intentional profit of 5% and if taxes of 20%, owners pay at 3,000 and operating expenses at 5,000, you can see we need a revenue of 10,666.67 every month to meet all of those categories. Now, what you can do with this revenue calculator as you're scaling is you can play with these numbers, and that's the fun part of it. So say we're looking at, so 5,000 for operating expenses. Well, that's the essential range. But if I want to add software, or I'm thinking about adding software that's maybe $500 a month, I can put it in this calculator and find out what my new revenue target went up. So you can see that it didn't just go up the $500 of the additional expense. Because of the percentages for profit and taxes, it actually went up more than $500. So another example with this is, what if you want to increase your owner's pay? Say you want to increase your owner's pay $2,000. So you're taking $5,000 a month. Again, you might think that that might change your revenue target to just by $2,000. But again, it's going to be more than that amount. You have to make more money, again, because of the taxes and the profit. And you can use this as you are thinking and considering all of the different expenses as you're getting ready to scale. So maybe it's something that you want to add. Maybe it's a new employee that you need to add, and that's going to raise your operating expenses by $1,000. Well, what is that new employee really going to cost you? Again, you can put it in the revenue calculator and see what it is your revenue is. Now, this target is gold, because as business owners, if you have a target, so Zig Ziglar always says, you can't hit a target that you can't see. So when you say to yourself, I want to make as much money as possible, that's just kind of like, yeah, I don't know. I'm doing everything I can. But if you say, I need to make 14,666.67, and you're currently making 13,000 a month, then your brain gets the opportunity to go to work and try to figure out what it is what do I need to do to make up that difference? And it could be something like getting one more client. Maybe it's just getting one more client so that you can hit that revenue target. Where before you were saying, I just need to make as much money as possible. Now you have a concrete number that you can work towards. Maybe it's increasing your pricing. Maybe it's just changing your package by $100 a client, or some small little tweak that you can make to hit that revenue target. So on a final note with this revenue calculator, make sure that you run different scenarios. You want to know your essential, your optional, and your long-term numbers. But then also, as you're getting ready to scale, run the numbers with the additional expenses added in so that you can see what it is, the revenue target that you're going to have to hit. Now, of course, we always are looking at the profit of each item. And are they helping you increase your profit? Does it actually, can you see a return on your investment? So these are the things that you need to really be looking at as you're getting ready to scale. Okay, so we're going to jump back to the slides. Okay, so the third thing of my essential four is a cash flow manager. This role often gets missed, and that's okay, but it needs to be someone whose job it is to look at the actual cash in your business on a daily basis if possible, if not 2 or 3 times a week. It's not looking at sales or receivables, it's actually looking at the cash in your business. Now, for most of us, it's you're the cash flow manager, and that's okay as long as that's something that you love to do, because nobody knows your business better. The bad thing is some people don't like doing this, that they have time constraints and divided focus. They would rather be doing something else. Now, for me personally, this was one of my favorite things to do. And so this was something that I kept doing through the entire process, because that is something I love. I would rather delegate something else, but that may not be you. And a lot of my clients, it definitely is not that they don't want to do it. So the next option is to have an employee do this. Now, could be a really good idea, because they have in-depth knowledge and understanding of your business. They know how it works, but they might not have the expertise, or they might just have a limited perspective. Even though I was managing the cash flow, I saw in my employees, a lot of times the employees would see the amount of money coming into the business and really question, like, well, why am I not getting paid more? They didn't understand all of the other expenses that I had to pay as a business owner, the cost of the equipment, all of the things. But an employee is really also good as you're looking at changing and expanding roles. Maybe if you're overstaffed and you need to assign this to a role to somebody, you can do that. And finally, hiring a third party to be your cash flow manager. They have expertise in objectivity and experience usually, but they might not be very familiar with your business. And so as a business owner, you need to be sure that you give them the time and the resources to help really understand your business. And finally, a reporting system. Now, especially if you are not the cash flow manager in your business, it's essential to have a cash flow reporting in place to understand your cash flow situation and make the necessary adjustments. If you are hiring or you have an employee doing this, make sure you set up a schedule. How often are you going to get reports, and how often are you going to meet? I would recommend that you meet no less than twice a month and that you get reports weekly. But again, it's up to you. I know some CEOs that want to meet weekly, and that a report weekly isn't enough, that they want to meet weekly. And so that's okay. Just understand where you are and what you need to be successful with your business. And then also create an emergency action plan. And you can tell your cash flow manager, like, hey, if the cash ever hits this level, this is when we need to put our emergency action plan into place. Oh, okay, so I'm going to take a deep breath because we're almost done. That's been a whole lot of information, but we're going to go ahead and finish it up. We're going to come in with forecasting and performance. So forecasting is so important. So often that gets missed. Transitions are the most expensive time in anything, whether it's a business or a relationship or moving across the world. It is an expensive, not only in money, but in stress and energy. And often during your scaling, you're going to see lower revenue and higher expenses. Let me repeat that. A lot of times you see lower revenue before you get to the higher revenue. And that's because you're transitioning, you're doing things differently. Maybe you're not doing as many one-on-one clients. Maybe you're just doing things a little bit differently. And as your messaging has to change from the old program to the new program, you are going to see lower revenue. And so you want to plan for that. You also want to run different scenarios. So again, it's the best, the middle, and the worst case scenario. And what's going to change? What's going to stay the same? And just make sure that you are running multiple scenarios, and then arm yourself with data. It gets into that mindset thing as you're going through all these issues and dealing with your mind drama. Arm yourself with the data, with the actual numbers of what is real, what are facts, and try to stick with the facts when you can. Okay, so where do you get this money? There's really two simple ways to get, not simple, but they're just easy way, not easy either. There are two ways to get the money, and you could be self-funded, which is those envelopes that I talked about ahead of time, which are your reserves, or your scaling expenses, or you could get outside funding, which are bank loans and investors. There's no right way to scale. It is just what's unique to you and your business and your needs. And so just be sure that no matter which way you do it, you have every scenario that you put into a forecast and really understand what it is going to cost you in your business. And so finally, the tools that I use for forecasting is, of course, spreadsheets. And if you can easily find forecasting spreadsheets on the internet. There's also a software called Float that I use that I really love. And so those are just some tools that you could use as you're getting ready to scale your business. So now what? What can you do today? So the key takeaways, I want you to make sure that you know that there are rewards if you scale your business and you do it correctly and you have the plan in place, but there are challenges. There's the mindset challenge, the plan, and the money. So today I would love for you to go ahead and take your next action steps. Pick one of these items. And if you really want to go above and beyond, pick one from each category and plan and create a system. What can you do to help your scaling your business move forward? And so finally, if you didn't get all of that or you need help, you can go ahead and scan this QR code, and I've given you a quick start action plan on scaling success. You could also go to my website, which is ebandcashflow.com. If you do /scaling, you'll go right to the form that will send you this scaling workbook. I would love to hear from you. I'd love to connect. You can find me on all the social media. I would love to know if anything resonated with you, or maybe you disagreed with something. Send me an email. I'd love to chat.